Hi everyone, this is Ryan B with Practical Forex Trading, and this is your pound dollar, Great British Pound US dollar weekly analysis. The date is February 2nd, 2020. Okay, let's get this going. So I'm starting off today with the daily chart to show the recent price action, and my sentiment is bullish, right? With the markets kind of exploded their day. I'm not sure if it was because of Brexit is why the bullish momentum, or because there's a huge U.S. dollar sell-off is why, but we saw some very bullish candles and price action from the pound versus the dollar. So what had happened was last week kind of started, as expected, price continued to decline. Then price really poked around at this $30, $29.80 mark, but then kept getting rejected. So if you think about the table, like a tabletop, price then just bounced off the bottom of that table. And then on Brexit Day, price just rocketed upwards. This is a giant bullish candle. 1, 2 in a row, and I believe we're going to see a third bullish candle. So let's go ahead and place our pivot point. So we see that price could, just kind of go back to the pivot and gain some more buying before it continues upwards. We've got the first resistance at 32.85. So that's our previous high from this last rally back in the end of December, and where price couldn't stay above that in the middle of December. So R1 32.85, and I think it's very likely that we'll see that tested very soon, early this week. Okay, so let's go ahead and place R2 33.64. So then our next resistance point is going to be right here at this last high. And these are fairly easy to place because you can see that it's right where the candle couldn't close above, right? So you've got the shadow of the candle there, the tail, but the body of the candle couldn't close above that line. That's a pretty good, even without looking at a pivot point chart, it's a pretty good way to tell where your resistance and support lies. There we go, R3 at 35.19, where the tip of the candle was. Right there. Okay. So that's your resistance for this week. And I tell you what, in uptrends, you usually see the price go up and kind of pop a hole in like the clouds, then come back down, and that makes it easier for price to go back through. So that's what would have happened here with this earlier poke through. So now let's look at our support. We've got support at 30.50, right? So even if price were to go all the way back to retract at this point, it's still a buy, because we've got some really good support along this line. Support to 28.95, right below it, so this last low there. And I wrote this ascending triangle bullish wedge because when I look at this price action, what I see is an ascending triangle. I'll tell you what I mean. It means price came up into here, right? And now price is doing this, where the lows keep getting higher, and they keep putting pressure on this tabletop, and once they go through there, it's going to pop right through. So that's what I mean with this ascending triangle or a bullish wedge. So let's go ahead or support 328.15. So really though, if I'm buying in an uptrend, I'm going to put my stops below the last low. But this, if price came all the way back down here to the 30 mark, it would still be a buy. I don't think we're going to see that early in the week because these candles are so bullish, really moving price action away from there. If I saw price below 28.90, that would reverse my sentiment and make me bearish once again. Now let's go ahead and zoom in, and I'm going to reset this. Okay, great. So now what I want to look at is my parallel trend channel. So that was our bottom, right? It's our bottom channel. But look at how much motion, if you will, how much it propelled off that price. So that means price moved into the next channel. So here's our next channel. What you want to do is make it the same angle as your deeper trend line, right? So we've got that. So price really pushed up and moved into, actually we're going to say this channel. So the reason I picked this, I just moved it up, is because price has touched this in the top and bottom many, many times, right? So we see that happen here all the way through late 2019, early 2020, came below it, couldn't break above it. Now this is just the 4-hour chart, but all charts work the same way, the same principles. So we've got that price at the top of that ascending trend line. We've also now got price on top of this more minor support and resistance line. So what that means is I'm going to hold my buys, right, as price continues to shoot upwards, but I'm going to put my stop losses underneath this 3096 level. Because even though it could be still on the uptrend, at that point, well, I'm going to say, well, I could get a better price for it. So I'd rather just stop out and buy it for a better price because I'll make more money, make my pips back. So yeah, so now if we were to look at this is a 4-hour, and you can keep doing this. You can keep taking and say, well, all right, maybe if price keeps continuing up in the upwards fashion, then we can say we're in this channel. Once again, another ascending bullish wedge, right? So all these different things tell us that price is just moving up at a pretty significant rate. So let's go ahead and add our moving averages. And I'm going to stay in the 4-hour here. I don't want to get any smaller than that, just because I'm actively trading the pound this week, and I really want to see what's ahead. Because even though you can use charts to help you plot the future, you have to live every day in the market in real time, right? One of the hardest things for me to do is just walk away from the charts, even though a lot of times that's the better scenario. If I'm holding a great buy that I think is going to take months to resolve, or weeks, or days, it's probably just more advisable to walk away, because you're not going to talk yourself out of holding that trade. All right, cool. Here we go. So we've got about bullish crossover just happened, the 50 over the 200, and it looks like the 20 is about to take over the 200 as well. If I'm day trading, I really want to think about the hourly chart. And so there we go. We've got a real bulls in play here. We've got the 20 on top of the 50 on top of the 200. What I can even do is wait for price to come back here to 3180 mark or so, and then do some more buying. And at this point, if price wants to just cool out and hang and chill out and go to the side, that's even better, because that means the price, the trend is building support. When we see these really quick uptrends, you get concerned because you're not sure if it's just a rally that's going to get sold off. So actually, the longer these take, the better they are foundationally. But because we see this spike here at 3174, price might not go below 3170. So it looks like it's going to stay aloft pretty well. Okay, well, good luck trading this week. I hope you make lots of pips. Make sure you subscribe to our channel, and we'll talk soon.